investing is so easy these days, isn't it? A quick coffee tip from a friend or a confident prediction from one of the so-called experts on one of the channels that this stock is going to double next month. And within no time, you're already on Google looking at the historical charts or reading random reviews or making few phone calls. And within seconds, minutes, okay, maybe hours at the most, the decision is made. But do you know how detailed is the actual process of identifying a truly good company? For a fund manager, it's not a 2-minute noodle decision. They follow a structured, meticulous, and time-tested process. And that's the process we are going to discuss today. They begin by analyzing broad economic indicators like GDP growth, interest rate movements, inflation. What do these indicators mean for economy? Is economy expected to grow or is economy expected to slow down? If an economic slowdown is expected, they prefer to invest in defensive sectors like FMCG because in tough times, people don't stop buying basic day-to-day needs like soap, flour, oil, or groceries. Next, they evaluate which sector is expected to grow in next 5 to 10 years. Electric vehicles, renewables, pharma, data centers. Then they dive into companies' valuation by reading, analyzing, and assessing their annual reports, profit and loss statement, balance sheet, cash flow to understand their profit levels, debt levels, market positioning. If required, they'd also read and review management interviews to understand their short-term and long-term visions. If they find that the debt levels are higher and profit levels are unstable, they would avoid those stocks no matter how exciting the story sounds. The next obvious step after company's valuation is to carefully determine the fair value. Fund manager carefully determines the fair value and compares it against current market price to understand if the stock is undervalued, overvalued, or just a hype. And they don't stop here. They extend their analysis by physically visiting the manufacturing site to analyze more, to understand more, and to validate more. Do you know that most fund houses have at least 20 to 30 analysts whose full-time job is to research and analyze on a day-to-day basis? Now that's the kind of depth behind every decision that is made. So, what will you prefer? 2-minute noodles decision? Quick, reactive, and fully loaded with artificial flavors? Or fund managers' structured, meticulous, and time-tested process, just like mass cooking, with lots of time, patience, and oodles of love? In the next episode, let's decode fund managers' stock selection process. Let's understand what gets them to say a yes.